To use this strategy, we just need an exponential moving average of 100 periods and any graphic. It can be of Bitcoin, indices, or any other type. It can even be or any time, since this strategy is applicable to any scenario. This is because it has solid fundamentals. We are going to try to apply this strategy to Bitcoin. What we must consider first is if the price is above the moving average or below. If the price is below, we will just invest down, and if it is above, as in this case, we will just take bullish operations. Once we detect a direction of the trend, we will start thinking about how to invest. At this point, we see that the price has started to recede. What we must do now is to draw a bearish trend line, and we will wait for a breakout to the upside. If the price breaks to the upside, it will mean that the trend is strong, and it can give us a bullish movement. Very important. Let's see that although we invest in favor of the trend, we are looking to buy as cheap as possible. In other words, we invest when the market goes down. Good, here we have the expected performance. It is time to enter at the market. Our entry will occur when the candlestick closes, which breaks our trend line. Our stop will go in the lower part of the fall, and we will take the profits and our risk benefit, 1-to-1. Basically, we must calculate the distance between the entry and the stop, and we must relocate it to the upside. Once we are inside the market, we will see what will happen. We see that the price has been shot up and taken us out with a profit. Let us see if the price gives us another entry opportunity following the same steps. Wait for the price to go back. Well, here it seems the price is starting to go down, so we will mark our trend line to the low and we will wait for the breakout. Well, the price broke, so we will follow exactly the same pattern. We will place our stop in the lower part of our downside move, and we calculate the same distance to place our take profit. Once we have placed everything, we just need to wait and see how the graphic evolves. It seems we also won this one. Let's see if the market gives us any other opportunity. We can see how the market has started to go back. We draw our trend line, and we wait for the performance. It seems our trend line has been broken, and here is the question. Do we need to enter this time? The answer is no. For you to follow this strategy, try to follow these simple steps. First, you must detect a trend. We have done that thanks to the moving average. Step 2, confirm that the trend wants to keep going up. We have confirmed that when the price broke our line. And step 3, you need to know how to identify when the trend could be over. And this is the step that we need to learn. If we draw the perfect trend and we analyze it deeper, we will understand everything better. A trend occurs when the price goes up, but we can see that it does not go up in a straight line, it goes in zigzag. So, we will mark with red color the peaks that we have down, and we will mark with green the peaks that we have at the top, and so on. We can see that every time we have a new peak, that new peak will be above the last peak. If we see the red points, we will see that it happens exactly the same every time that a new peak comes out. But if we go back to the graphic and draw the green and red circles again, we will notice that the green points meet the pattern. Every new peak is higher than the other one. However, if we see the red circles, we will see that the sequence was being fulfilled until the new opportunity appeared. The peak, instead of closing above the previous peak, it closed below. That means that the bullish trend could end. That is why we need to avoid entering in this opportunity. If you are curious and you want to know what the price has done, let's see. The price has generated a bearish movement, and that is why it is so important to take in consideration where the peaks end. Let's see another example. Until now, we have seen a bullish trend, but what happens with bearish trends? Let's look for a graphic with a bearish movement. Here we have $/yen breaking down. This is the first step. The second step is to find an upward market correction. We have it now. It is time to draw our trend line. Remember that when the trend lines are bullish, you must draw them above the graph, and when they are bearish, we must draw them above the graph. In this case, we must wait that the price breaks. It is important a clear movement and that the candle has closed. Now we can enter the market. We are going to look for the highest peak of the bullish movement. In this case, it will be this one, and we calculate the distance between our stop and our entry, and we project to the same distance the take profit. Let's see how it evolves. Here we can see that we won our operation in a fast and clean way. This should always be our objective. As the trend keep making highs and ever lower lows, we will continue taking advantage of them and we will take all the profits that we can. Remember, the two first steps are easy, but the most difficult step is the step 3. We must detect fast when a trend is about to end. For example, in this graphic we could have taken all the opportunities that appear until the peak that is below has exceeded the previous peak. Let's see how the graphic evolves. As we can see, although the price was falling, it had a strong bullish movement which we have been able to foresee it. I hope this video will help you to improve your entries in your trade. Don't forget to subscribe to my channel and like the video. See you in the next wave.